But years of trading and studying the markets and probabilistic thinking and making good trades and bad trades taught me that it's a better bet to buy here than to sell here. And that's all that mattered. Everything that came after was just a combination of good fortune as well as understanding of the market. We got the market cycle. We did go bull market again. We got the AI hype, which AKT is involved in. And then there's obviously some big money buyers coming in along with it. But even with that none of that was guaranteed. And so now it becomes much trickier. If you don't catch the bottom of a bear market, it's a lot trickier every stage of the way up. So what you need to do is keep your head, stay cool. Now there's a couple ways this can go. I'll show the super bullish side first. Here's another AKT chart. If you're trying to buy it here, the only thing I can say is you're doing the equivalent of this or this or this or this. And if you just waited in any of these, if you just waited 3 or 4 days, you get a retest of the bands, retest of the bands, retest of the bands, retest of the bands. Any of these bottom ones, they're much better places to buy than buying any of these top ones. So right now, we're more likely at the top one. And maybe it keeps going. I do think it actually does keep going because we might just be in this phase where there's no pullbacks. But that doesn't mean you should buy because that's not a good place to buy. If we do go back into the bands again and you want to buy it, then just buy it there. Don't panic again. Like don't convince yourself again, oh, this time it's over. If it comes back for a retest of the breakout and it touches the green bands, then if you wanted to buy there, that would be better than buying here. Doesn't mean you're going to be right, but it's certainly better to buy 269 than it is to buy 320, right? So yeah, that one maybe, possibly. But like I said, the downside is potentially all the way to 140. It could go there. It might not go there though. So we're in this tricky situation where, and I want to show you some past charts. I'm going to show you AVE and Ethereum as a couple of examples of when coins are coming out of. AVE is the closest one when coins are coming out of a bear market, right? And I'll just use the EMA bands as well. And we just look at it here, right? So what you're looking at here, maybe I should go onto a log chart for AVE. It might show it a bit easier. Maybe I'll do them both on log chart and see how that looks. Just makes it easier to see. They're both very, very similar in terms of the launch. This wasn't the launch of AKT, but it was the peak of the bull. Declines all the way through the bear. Declines all the way through the bear. Bands are red. Bands are red on the weekly. We reach a bear market low. We have our first little rally. Rally up. Second one. Third one. Second one. Third one. And then we're breaking out. So you'll notice that, let's say, in the case of AKT, that we're around here, right? Where it's broken out of that level. Broken out of that level. You'll notice that AVE never came back to that level. Right? AVE just kept going up. But when you look at it on a regular chart, it obviously looks a lot more extreme because that's how it tends to look on linear versus log. And then you look at AKT, and again, it looks much more extreme. But in reality, if AKT is going to go to new all-time highs, and it's had a lengthy bear market, and it's now climbing out of that, like AVE was, and they're very similar charts, where you have your first rally, second rally, then you flip that from resistance into support, then you flip that from resistance into support, and then it hugs the weekly bands all the way and just impulses and impulses and impulses, and it's really difficult to get on. You can see here we flipped that and it's impulsing, and now look at us, we're going off the screen. And I've talked about this for weeks now on AKT. And it's doing, you know, even the levels along the way. This bear market rally, complacency bounce, counter trend rally, whatever you want to call it. Right? AVE came up and wicked that and then went past it. AKT is currently hitting one of those levels here and is wicking past it, or is actually pumping past it. So the reason I say it could go all the way to all-time high, even though it seems crazy, is because that's what these parabolic charts tend to do. And so you could see AKT just up, no real pullbacks, up to $6 or $8 before there's any significant pullback. Now, AVE then went way beyond it and had a deep pullback all the way back below. And here's the part I really want you to focus on if you're not long. At some point, there's going to be, some kind of correction like this. And I think the 200-day and the 100-day moving average are the ones you should look at. Right? So here's a 100-day MA. You put it on the daily time frame. And then a 200-day. Right? So, you'll notice that from March 2020, it just went up. Didn't come near them. Pulled back to the 100, but didn't really respect it. To the 200, held it. That was the very, very bottom. And then look at everything that came after. Right, after that point, on AVE, there was still a 20x that came after all that. Now, if you're looking at the comparison to AKT, and we're somewhere like maybe here, right? Maybe you're lucky and it goes up and all the way back. Maybe it doesn't. Maybe it just goes up as far as here and then pulls back. I don't know what's going to happen with AKT, but I do know that at some point there's probably going to be a pullback like this, and it's much better to buy the blood than it is to buy the kind of FOMO right now, because AVE pulled back 71%. And for anyone who bought late, that was scary. But for any early buyers, that was not scary. Because I'm in for 55 cents. It could pull back 70% now and not even go to my entry. It would only go to 92 cents. And if it does what AVE did, and let's say it does another pump, right, up to this level, then if you bought in here, price is going to come back to this anyway. That's a 50% correction. So even if you bought in here and rode that up, it's going to come all the way back, most likely. And it could even come back 70%, which is back down to that 170, 160, 150 area. That all depends on, the overall market as well as the 200-day. So here's the important thing. Here's the 200-day and the 100-day that I want you to look at and keep an eye on. And I'll just take everything off except the indicators. So the next best time to buy AKT is the 200-day moving average or 100-day moving average retest, whichever one it holds. And by that I mean it comes down, you have to give it like a week or 2 weeks to actually hold it. You'll see here, right? It sort of held, it closed above it. I guess you could have bought there, right? If you're going back in time and you're watching AVE pull back, you might be like, okay, this is pretty good. Looks pretty good. How's it going to close? Closes above it, looks pretty good. You wouldn't blame someone for buying there. Now, if you bought there, you're buying when it's down 42%. So you're not buying into FOMO. You're buying a significant correction. That's good. But then look what happens after. Right? It goes down a further from that entry. It goes down a further 48%. You just have to not panic at that point. You can't catch the absolute bottom. Because then it's easy to say in hindsight, oh, I should have bought the 200-day. I was like, okay, but with this close, would you have? With this weekly close, would you have bought the 200-day there? It certainly didn't look strong. It was, it held it, but it was a kind of bad-looking candle. And this is where the candles can lie to you. If you have a plan, and your plan is to buy the 200-day or the 100-day, and it's down 60, 70%, you just buy it. It's risk-reward. The risk is what? It goes to zero? Okay, but you've researched this project. You like it, yeah? Is everything still valid about your thesis? These shakeouts are designed to make people panic and sell. And so then look how good it looks just 1 week later. Suddenly, and even there, this was early the following week. Look at this. This does not look good. I want you to ingrain this in your head for the bull market. This is the 200-day moving average. This is the dividing line between bull and bear markets. That's what everyone uses. Above a 200-day, we're in a bull market. Below a 200-day, we're in a bear market. And look at that. Right, this is 2 or 3 days into that week. And look at what happens. Next day it doesn't look so bad. Next day it looks even better. Next day it looks even fucking better. Next day it looks incredible. And then fast forward and away we go. Right? Things can change so fucking fast in this market. So how would I approach this with AKT? Well, exact same thing. Let's say right now, let's use the 200-day. Currently, we are 169% above the 200-day. Right? And that means that AKT could pull back 62% and still be bullish. If it wicked down to 62% right today, still bullish. Still bull market, even though it went down 62%. Okay? It's not going to happen, but it, hypothetically it could, and it would make a lot of people panic, even though it would still be bullish, technically. Now, AVE, let's go back and look at that as well. So when AVE was here, how was it looking versus the 200-day? So at this point, it was 335% above it. So AVE much stronger. We had all the COVID money printing, so it's a bit more exaggerated. And right here, it was 76% above it. 76%, pullback into it. So if you're comparing it apples to apples, which is not, but if we're comparing it like that, we said we're 169 above it. So it's actually a bit more like AVE being, I guess, here. No? Still. But if it was a 60% pullback, maybe AVE was just so strong. Yeah, no, it's still always 80% pullbacks. So it's probably here. Same thing again. AVE was super strong. The point I'm trying to make is, you can look at this and say, it's a long way from the 200-day, and it's significantly up. And so is it a good is it a good time to buy? Not necessarily, right? But also, look what happens. It rips so much higher first. And gets to a point where it's just insane, and it's hundreds of percent above it. And it stays there, right? And if you look at AKT, we're breaking out from a consolidation. It's only 1 week since we had a consolidation, the red week. This is only the first week since that. Again, go in, red week, moving up. Red week, moving up. So we're somewhere like here, breaking out after consolidation. The time to really be concerned about a coin like that is when it has uninterrupted several weeks green, because you can't just have green weeks forever. And so once you had 5 green weeks in a row for AVE, that's when it really got onto everyone's radar. You think about it like this, like right now, no one's talking about AKT on Twitter and YouTube. It's not trending. Like, it wasn't trending yesterday. I don't think it's even trending on CoinGecko yet. Nope, it's not trending. Right, that's one of the signs you look for is my coin like